Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. Well, it's a Wednesday, and hopefully everybody is staying warm out there. It's getting chilly here in Dallas. Interestingly enough, the stimulus bill looks like it may be going through, and the Dow is sort of rallying, not really hugely, but it seems to be moving up. So hopefully it will make it will make some difference here. But let's get into it. Here's the market direction. The market direction is definitely in a uptrend. The Nasdaq is 12,408.60, and both the S&P 500 and the Dow Jones are up. Of course, the Dow Jones is moved up 219 points, so that's pretty good. And I think that's based on the the potential for a stimulus bill, which would definitely bring some relief to some of the industries that have been hurting, especially the ones that haven't been able to open up. So hopefully that will happen, and we will see some movement up in it. But basically we have the spider is above that key level, the 360 level, and so it's moved up about $1.27 today, just about 0.35%. So not a whole lot, but definitely going in the right direction. The volume's down a little bit, so it's sort of weak, but we're above that key 360 level, so that is very good. And hopefully it portends some good stuff in the future. In terms of the QQQ, that is that's also chugging right along, and is up $1.28 or about 0.42%, which is also very good. Coming into, so we definitely see money flowing back into the market, after this a little bit of a rotation. And of course, the most important one, of course, for the people that are value investors, of course, is the what they call the diamond, and this is the world's largest ETF that deals with the Dow Jones 30. So, and this is up today too. So, kind of use this as a proxy. It's above a key level, and that key level is about 300. So, looking good there as well. Are we out of the woods? Well, I don't know if we're out of the woods yet, but I definitely like this this movement back in the market. I think the stimulus is helping a whole lot on that. Now, I did add to the small portfolio today. I added interesting stock. I was waiting for this to come through earnings, and it did really well, and it gapped up, and that is CrowdStrike, symbol CRWD, and it's up $19.77 today, or about 13.97%. Now, I wish I had gotten it right at the beginning of that run, but at least it's moving up, and I do think it's making a new high. So we'll see how it does. Component, the overall rating on the stock is 89, so that's quite good. The volume, but the key here is it's up strong, and it's up on huge volume, 286% up. So that indeed is very, very good. Just wanted to give you a kind of a rundown on my current holdings. I've been kind of rearranging the deck, the chairs on the Titanic here. So here we go. NET Cloudflare, it's up about $2.99 today, or about 4%. So that's pretty good. Tupperware is up again, $2.94, or about 8.63%. So it's doing really well, but on kind of weak volume though. So that's not as exciting. Blink Charging, it's off a little bit, but and the volume's up, so it seems to be settling in at about that $22 range. So hopefully it won't go any lower, but I do think that they have a good business model, and hopefully we'll see some more upward potential in there. Progeny kind of holding in there at $36.98, up about 0.52 cents, about 1%. AMD is down just $1, but still, it's down a little bit. I doubled my position in that. So, and that had a good sharp run, but we'll see. Hopefully it will move up from here. I'm hoping that is the case. PayPal, it's up again, $2.29. Now, there's a key level here. If it can break through about this 215 level, I think it's going a lot higher. It's up about 1.28%. Apple's up again just slightly, not a lot, 0.11%. This is kind of a slow poke, but hopefully it's going higher. It's got a very nice chart pattern, and I bought it off that chart pattern. Bought CrowdStrike today again. Of course, that's up 13.75%. And I have also a position in Palantir. Now, I came back into Palantir, as you might have known. I sold Palantir into earnings, waited for it to come through earnings. It pulled back, and then I'm buying it on the rebound. So hopefully I did it right, and that will, that will allow me to get into the, get into the stock at the right level. And but we'll see. It's always entries are the bane of my existence. It seems like. I mean, I always, I'm always trying to get the good entries, and because it does make a lot of difference in how you're gonna, how the stock is gonna play out. So, without further ado, thanks for waiting. And first question is from SP. Hello, sir. Is Spelunk a good buy? Thank you. Okay, let's take a look at the chart for Spelunk. That's SPLK. That's the symbol for Spelunk. And of course, it's a NASDAQ stock. Let's take a look at Spelunk. Well, unfortunately, let's look at the weekly chart first. You always start with a weekly chart to get the idea of the direction. It was going along so good, and then it hit earnings, and then it fell off the cliff. It's pulled through the 200-day line. We don't want to buy it at this level. This is the reason why I always implore people, coming into earnings, you don't always have to do this, but I like to do this if I have bought the stock and I don't have a lot of a cushion in it. What I will do is I will sell the stock into earnings, and then on the rebound, I'll buy it back. Now, sometimes you give up a little bit for that, but it can save you a heck of a lot of money, because unfortunately they just came through earnings and their sales were down. So they took it in the chin, and I just don't know, how it's going to go there. Just wanted to kind of go through everything here. In a growth stock, it's so important that you that the sales continue to go up, and when they don't, that's kind of when you got to bail, unfortunately. Unfortunately, the relative strength here is 65. I typically like to see at least 80 on that. Let's look at this. Let's do the smell test. Well, it's got 4 out of 9, 6 out of 9 is my minimum. So here's the thing for Spelunk. I think you have to kind of take a, I think you kind of have to, it's not a buy. I mean, it's absolutely not a buy. Spelunk is not a buy. So just, maybe keep it on your watch list, but I wouldn't buy the thing right now. Good afternoon. I am planning to invest $40K on Tesla on the next pullback around 540, and $20K on Apple. Is it a good decision, or is it better to invest in multiple stocks? Please suggest. Thank you. Well, that's a very good question, SP, and I thank you for listening to me. Here's how I invest in stocks, and of course, this is just a suggestion. I do what they call position trading. I'm going to move over to the small portfolio and kind of show you what I mean by that. Well, when you invest, you should never think of your investment as a pizza pie. And let's say, for instance, that pizza pie is worth $10,000. I'm just making this up, but you can add zeros or not. There would be 8 slices in that pizza pie. So as you move into positions, you want to move in kind of pizza slice by pizza slice. So you don't want to put it in any more than one position at a time. If you put it in one position and it's good and it shows some strength, then you get another one, and then you get another one. Try not to have more than about 3 full positions. What I do here on the watch list here is I have a watch list that shows you exactly, and I update this every day, what is in the zone. For instance, Palantir Technologies here, with the value of this, what I have in this one, on a consolidation base, basically shows that I can buy 37 of those. So if I buy 37 of those little stocks there, you'll see that it only takes up 1 pizza slice, and then you can see there it is over on Palantir. So that's about 1%. So here's what I would do if I was going to do the Tesla one. I wouldn't go in with any more than maybe 1 or 2 full positions. So if you're looking at let's say you were looking at a $40,000 portfolio, then you would multiply that, you divide that by 8, which would give you the number of the number of, the amount that you should invest in that. So I wouldn't invest the entire amount in Tesla and Apple. Though those are two very good stocks, I wouldn't invest the entire amount. I would hold off and, and basically invest 1/8, 1/8, and 1/8. And that's how I would do it. So in terms of the entry point for Tesla, I'm also waiting for Tesla to move to a new buy point. So let's bring up the Tesla chart and take a look to see kind of if there's any, what's going on there in terms of where could we enter this thing? Where could we properly enter Tesla? Okay, so first of all, we go to the weekly chart. We do have an ascending chart. That's the first thing you always check for, is to see that the chart is ascending, and definitely that's true with Tesla. So that meets the first test. So then let's go to the daily chart to see if we can find an entry point. Well, as you can see, Tesla has pulled back to the 10-day moving average. That's this little pink line I have here. Now, the next stop is this other line, this green line, called the 21-day exponential moving average. Now, as you can see, it pulled right back to the 10-day line, and then it bounced up. So right now, there's resistance right about here, right at 600. So what I want to see in order to buy Tesla is I want to see it move to above 600 a share. I want to see it to move right in this area. So I want to see it move above that. And when it moves above that on strength, that's volume, then we have a buy point. And I will be covering this in the action trade alerts. So it's super easy to get on the list for action trade alerts. All you have to do is go to the website, www.dallastradingfloor.com, and then sign up, and you will be on the list. It basically, the website, it's super easy to do. You just go over to the website, and there it is. I'll show you the picture of the website here. And just right here, first, last, and email, hit the subscribe button. You'll be on the action trade alerts. And I will be covering, I will definitely be covering Tesla in terms of buy points. So if you want to get in on that. So next question. Thank you, Kristen, for waiting. Thoughts on NNDM, Nano Dimensions, and cost on, your cost on Tesla is 552. Should I buy or sell more? Thanks, Jim. Okay. On the first question, great question there. On the adding or adding to your position in Tesla, you're in a great position, but I wouldn't add until it moves above 600. That's the key. It moves above 600, and I think you have a good place to add. I basically sold all of my shares at 570, and again, I'm just waiting for it to move past that resistance at 600. So that's what I'm doing. And of course, hopefully you're on the action trade alerts, and I will be sending out information on that as well. So there we go. Okay, so let's look at NMDM. I'm going to pull over to the charts here. NNDM. So this is Nano Dimensions. Nano Dimensions. Okay, this is a Israeli company. Kind of interesting. So we definitely have quite the UN when it comes to when it comes into stocks. We want to first look at the weekly chart always first to get a general trend. Now, here's a little bit of a concern. We have a downward slope on the trend, but it looks like it has broken trend right about here. So that is good. So it's broken trend, and that is a good thing. So we are in a uptrend, which is a good thing. We have a 99 relative strength. That is good. And we are getting new highs. Now it seems to be moving right up to the 21-day exponential here. Let's take a look to see kind of what's happening here. They're basically they develop ink materials for electronic circuit board etching. So that's a good industry. Sort of a printing play, but a printing play with electronics. So definitely like their sector. Okay. Unfortunately, though, we have a problem when it comes to their earnings. They just aren't good. I mean, they're decreasing earnings. I wouldn't recommend this one because we are in a situation where they just don't have the earnings and not, excuse me, not the earnings, the sales. In a growth stock, you're looking for good sales. Let's see if we can take a look at the smell test. The smell test, what I say is a smell test, it's basically looking at, you know, how it stacks up. So 6 out of 9 on the spell test is good. And we do have some, you know, we do have some funds in it. This is a highly speculative stock, and it's under $15. So it's difficult to play this one. Here's what I would do. I probably would not buy this at this price. I want to see if it's going to either, I want to see if it's going to settle at about $5. If this has a base pattern, this is a watch list. So don't buy this one right now. Watch list this one. And I think you might be you might be okay on this one, but I just wouldn't buy this right now. It just doesn't have enough good stuff in there to make that happen. So just to reiterate, with your Tesla, wait until it moves above about 600. That is the ceiling, and that's a good time to add to a Tesla position. So there you go. Okay, so let's see. Take a question from the next question. Your thoughts on Starbucks? You know, Starbucks probably, and I haven't looked at it in a while, may be a little bit impacted by the coronavirus because they've had to shut down so many locations. But it seems to still be, you know, the chart seems to be still fairly good on this. So, you know, it's always interesting. So let's just kind of go through the chart and see if we've got anything. Well, we've got a nice upward trend. That's definitely true. It's there. So that is looking good. This is, by the way, what I'm doing here, I'm kind of going through the steps that you need to go through when you're picking a stock. The first thing you do is you open your chart and you look at the weekly chart and you look at what is the general overall trend. And the trend for Starbucks is up. Also, the next thing to look is where the 200-day moving average is. On many charts, this is a black line. Sometimes it's a blue line, but this is a 200-day moving average. Make sure that it's above that 200-day moving average. Those are the first two things that you do so that you know that it's in a confirmed uptrend and the uptrend is accelerating. So that's a good thing. Now, the next thing I look at is a kind of a specialty indicator that may not be available on your charts, and that's the relative strength. Currently, the relative strength, it's different than the RSI. This is the relative strength based on a yearly basis versus the S&P 500. Currently, this is a 72. I typically only like to buy ones that are 80 on this. So let's go through this again. So that fails on that point. We have sales, but they seem to be moving downwards. So Starbucks is under pressure when it comes to their stores. So that's not something I really like. Let's look at the checklist. The checklist is only 5 out of 9, and I need 6 out of 9 minimum. So I'm going to reject this one. Also, we have to have increasing fund ownership. It looks like the funds are starting to sell this one. Now, if we're under the COVID thing for a long period of time, this one may be a short. This may be a short, but for right now, I wouldn't recommend Starbucks. So thank you for the question. I appreciate it. It just is not performing well in the current market. So that's kind of where where I am on that one. Okay, so let's take a look at some of the TikTok. Thank you for holding on TikTok. When do you think Airbnb is going online? I think by that you mean when is it going to IPO? I am not sure about that, but let's see if I can find an upcoming. Let me see if I can find any upcoming news on that to see. And I'm going to put Airbnb. Let's see if I can pull up any information on that. I don't know. Okay. Okay, upcoming IPOs. Let's see if it's on there. Okay. Let me see if I can. Well, okay. Well, it's not an IPO yet, and I don't know exactly when it's coming on. But I'd be a little bit careful in this kind of environment with some of these stocks that are based, on travel and leisure. I just don't think this is going to be a good area to be in But I will try to. I can't give you an answer right now, but I will try to get some more some more information on that for you. Good question, Robert. Sell SBE before earnings or after merger? Well, let's look at SBE. I almost always. So let's look at the events for SBE. There we go. And that's switchback acquisition. Okay, it's a blank check company. Here's the thing. Here's the thing with blank checks. I personally don't really like them that much. I would, but here's what I would do if I were in the stock right now. I think it's wise to buy on rumor, sell on news. So I would sell the day before the merger because it probably will retreat. That would be my guess. But SPACs are very, very hard to judge because they tend to be very volatile. You don't know exactly what they're investing in. You don't know exactly how it will perform. And the reason that people do this is because in order to get a quick listing on the exchange and take advantage of the market, they use these shells, these companies that have already been listed and maybe delisted, and then they just reverse merger into them, and then obviously they have a company that will go right onto the exchange. But I would recommend selling it if I was holding it now. I would sell it right before it merged. I think that that's your safest bet. Here's the thing: it's better to have a small piece of pie than have no pie at all. So sometimes it's better to sell before. So that's what I would recommend doing. Hey, happy Thursday. EXP World Holdings. Let's look at it. Okay, EXP. Let's see what we got here. Eagle Materials, and it's weekly. So let's look at the weekly chart. All right, good deal. First off, it has a nicely ascending chart, so I like that. That's the first thing I like to see. So that's looking good. Let's kind of look to see if we have sales. We have sales increases, which I like to see. I like to see that. So that's good. We have just come through earnings, it looks like, and they were up, so that's good. This is a little bit concerning. It's only a 61 relative strength, so it's already got a black mark for me. Let's look at the checklist. 6 out of 9, so that's good enough. Definitely for the smell test, it works. And let's look at the funds that are in it. We do have decreasing funds, but we do have a good one, this federated fund. And here's what I would do on this one. It's up $3.32 today. Let's look at the daily chart to see if there's any entry point in here. I just don't think I would watch this as well. I just don't think I would be a buyer on this one quite yet. It might move higher. I wouldn't even consider buying this one unless it closes above 97.79 on heavy volume. So I think this is a watch list right now. I don't think this is a buy. I really thank you for the question, though, but I don't think this is a buy right now. Let's look at Snap. Is it a buy today? Well, SNAP. And, of course, this used to be called Snapchat, and now, of course, it is just Snap. So Snap. Here's the weekly chart. Let's look at it. Great. Okay, so we got a very nice run on this. I'm liking. I like this action here. This is good. We had a gap up. We had a gap up right there, so that's powerful. This is a sort of a flag pattern, potentially. Yeah. So that's looking fairly good there. I'm liking that Snap. So this may be a buy. Let's take a look. We've got nice earnings. We've got good volume in here that just since so there's been some serious we're through earnings, so that's good. It's 98. Let's look at the checklist. Wow, 8 out of 9. That's very good. It's good there. Let me look at the 1 minute. Let's look at the 15-minute chart to see if there's a place that we could buy this thing. Yeah, you know what? I like this. I like this. If you wanted to, and I don't know if I would like to do a little bit more research myself, but you could buy this right at this point, and I think you'd be fairly good. Now, if you do buy this at this point, you want to be careful and you want to set your stop loss. I would set it at 2.5%. I basically set it at this line here, which is the 21-day exponential. So if I bought it this price, if I bought it this price, I would set my stop loss fairly tight at 42.70, because if it pulls back, if it stays above that 21-day exponential, you're good to go. But yes, you could absolutely buy this right now and probably do very, very well. So I appreciate that. Snap looks looks good. Looks good. Thoughts on FSLR? Let's take a look at FSLR. FSLR. Okay, well, it helps if I put it in there right. There we go. FSLR for solar. This was a hot one. This is on a lot of watch lists recently. I think it's still doing pretty good. It's got a 91 relative strength. I'm liking that, definitely. Oops. There we go. 91 relative strength. We have a nicely ascending chart. It looks like it's pulling back to the 21-day. I'm liking that. And it, here's the thing, and it looks like it's pulled right to the 10-day exponential. A lot of professionals buy at this. Here's what you can do on this one. Let's see the weekly chart, just kind of make sure that we've got a good trend. Okay, well, we do have a good trend. So that's good. Now it is a little bit, well, we just came off a base. So the cup buy point was 81.87. So if we were to go 5% above that, that'd be 4. So that'd be about 85. It's a little bit extended. It's about $3 extended over the correct buy point. Wait for this thing to pull back to about 85. If this thing pulls back to about 85, I think you might have a buy here. Let's take a look at the, the change. Okay, so we've definitely got increasing sales, so that's good. Let's look at the fund, 62%. I'm liking that. Typically, the biggest runs in a stock come from when it's going to from 20% fund owners to about 65% of fund owners. It's 62% here, so it's definitely in the range. So that's very good. Let's take the smell test. Okay, well, 8 out of 9. That's a very, very good checklist. Increasing funds. You know what? I think you might have a buy here. And I don't normally say that, but I think you might have a buy on this one. But the thing is, try to see if it pulls back to about 85. If it does, and it reverses, then I think you have a good buy. And this is a good stock. So, even if you did buy it a little bit extended, I don't think it would be too much risk. Here's the thing: when you buy this, when you buy it, make sure that you put your stop loss about 2.5% below where you bought it. And that's going to give you protection in case it pulls back on you. But the ideal way to do it, right now it's pulling back. So if it reverses off of that 21-day exponential, then at approximately about $85, that might be a good place to buy it. So really interesting. And it definitely is, First Solar is a buy. And I like this one a little bit better than Snap, actually, based on the chart. So there you go. Okay, here we go. Thanks, Dinesh. I'm in at 80. Should I rebuy or sell? You know what? I think you might want to buy. I think you might want to rebuy right now and push your stop loss up, so that if it pulls back, then you're protected. But I think, Dinesh, you've made a good buy there. I think you have made a very good buy, and that might make sense. I definitely think it's buyable at about 85. It's currently 88.92, so it's a little bit high. See if it pulls back and reverses. But the fact that you're in at 80, that's a good place to be in. I think that you're right under that 40-day. You're right at that 40-day line. So that's very, very good. What I'm talking about here for everyone just kind of is that there's 4 lines that I look at. One is the black line on the chart, and I'll just pull the chart up here for First Solar to kind of show you what I'm talking about here, so that you can see this. And by the way, if you're looking on TikTok, I'm simulcasting this on YouTube at youtube.com/DallasTradingFloor, and this has all of the charts and everything. I can only do a static background on TikTok, so sorry about that. But there are several lines that you should be aware of. One of them is this black line here, and that is the and that is the 200-day moving average. You don't want to buy anything below that line. So if the stock is below that line, you don't want to wait. You don't want to buy it. Then this red line, this next one up here, that is the 40-day line, and that typically is where I like to really buy stocks as they pull down to the 40-day and reverse. Then there's two other lines here that you can't really see. One is a green line called the 21-day exponential, and then there's a top one which is the 10-day. So the fact that Dinesh, that you were able to buy this at the 40-day is really, really bullish, and I think you have a good buy there. But I would consider adding to that position. I think you might do well. That's at least what I'm seeing on the charts. So I think that's a good place to be. Thank you, Kian. Let's look at Tupperware, Form, and Snap. We talked about Snap, but let's look at Tupperware. It seems to have been getting some new strength. I'm in Tupperware on the small portfolio. Actually, I have it in another portfolio too. I've done fairly well with Tupperware, which is kind of amazing because it's not really my, I'm more of a tech investor, but I can't complain. I've done pretty well with Tupperware. I don't know why Tupperware is doing well. I can't figure it out. But I'm not asking too many questions. I'm just buying it totally off the technicals. I don't even really, my mother, God rest her soul, used to use Tupperware a lot, but I haven't really seen it since, for 20 years. But it seems to be doing really well because look at this. It's got a relative strength of 99, so that's excellent. It's trading above the 21-day line, and we just had this pull up. So, gosh, $2.88. I don't know who's buying all this Tupperware, but the volume's down a little bit, so that's possibly an issue. And the volume is a little bit less than it normally is, but it seems to be moving very nicely up to this $36 level. So, can we continue to buy it at this level? Well, let's look at the checklist. Well, it's come off a little bit. It was $8.09. It's now only $7.99, but it's still very good. And we have increasing fund ownership. So it's kind of amazing that people would be so into Tupperware, but they seem to be. So where could you buy this thing? I don't really think there's a good place to buy it. The last really good place to buy it was kind of where I came in, was right about here where it bounced off the 40-day line. I think that's what you got to wait for, is a bounce off this 40-day. And I think if you can get a bounce off this 40-day, it might be a good place to buy it. So for that to happen, it's got to pull back about $6. So right now, I don't think you could buy it in its present. Presently, I don't think there's a good entry point for it, but it's definitely a good watch list. It's just not necessarily a good entry point on that stock right now. I was when I went into to Tupperware. And I did sell out. I did sell the position out, but I was in at about 31. So that was sort of where I was in. But I did sell out of Tupperware. Okay, so FormFactor. This is interesting. FORM. I did sell out of Form. It's up today. Not a whole lot, 32 cents, but still pretty good. And this was on the small portfolio as well. We seem to have some, again, it's doing very nicely. It's got a nice relative strength, 93. We have sales that are up. Just came through earnings. I sold out before earnings, but we may have something that we can buy after here because it looks like it is up 77% on the earnings. So the earnings per share is very good on this. The next earnings are on the second on February 5th. So we got some time there. Let's see if there's any place that we could buy this thing. Again, it's just going right up that 10-day moving average. So there's really not a good entry point back into the stock. The last cup with handle base was the pivot was at 29.94. So it's still good. I think it's watch listable. It's really good, but this is not an optimal place to buy it, unfortunately. Hi, Jim. Is there a new buy point for Tesla? Okay, well, actually, let's take a look at Tesla. And of course, as everybody knows, I am a Tesla bull. And I am currently out of Tesla, but I'm looking always for a re-entry back into the mothership. So this has done well for me this last year. I started buying it almost a year ago now when it hit the first buy point on a unsplit adjusted 361. So let's look back to see, is there a entry point? Well, the classic consolidation stage 1 pivot is at 502, and of course it's way above that, and it's pulled right almost to 600. I think that we've got to be potentially interested in this if it moves beyond about 600, but right now it seems to be having difficulty with this level, this $600 level. So let's go back and look at a monthly chart. Yeah, see, we're almost at the all-time high for Tesla here, and this is looking at the monthly chart. So, but we have a relative strength of 99, and we have an upward trending, and the RS line is upward trending. That's very bullish. The only thing about this is we're a little bit low on the volume. Here's my thought. On the 12th, it will officially go into December 12th. It will officially go into the S&P 500. And so I definitely think there's going to be more people that are going to have to buy it. So the question is, where can we do that? There isn't really a classic buy point, but I'm just going to look at everything here. Our sales were up, which is good. We have increasing funds, which is good. We have 34% funds, but there's still room. So and we have cash flow. So we've got all the ingredients there, don't we? Okay, here's the thing. The last buy point was the last buy point was 502, but I do believe there's a psychological barrier at about 601, 602. So if it comes through that, then it's not really a buy point. It's a potential, place that you could buy it. I would wait to see if it could hold the $600 line. If it can, then I think we could buy it again. I really do. Yeah, but Tesla, it's tough to buy it right now. So here we go. Okay, so there we go. Hi, Jim. New buy point for Tesla. Need to wait for it to go. Yeah, I think you're right. I think we do, HC. I think this is absolutely true. I think we need to wait for it to go above 600. The reason we wanted to wait for this is because we want to make sure that it gets some supported about this $600 level. There seems to be a ceiling right below 600. If it can move above 600, then hold it for a day or two. Then I think we're off to the races again. So that's kind of where we have to be. I think with this, we have to wait probably until it's above 600. But it's at 593 today, so that's very strong. That's very, very strong. So that is good. Let's take a look to see if there's somebody. This is a question from TikTok, from Powder BAU, from Powder Bow. That's his handle. Do you think CRM will recover on the 2-week chart? So let's look at the CRM, and of course that's Salesforce. And as you know, they purchased they purchased Slack. Well, they have an agreement to purchase Slack, and when they announced that, the thing took a swan dive. And will it recover? Wow, that's a good question. I think it will recover, but I just think that this is not the stock it was just a few months ago. Even on the daily chart. So we've got a 59 relative strength. That is not viable, in my opinion. We have a pullback significantly below the 21, significantly below the 40-day line. Currently, there's a second stage base, and there's a pivot at 270.16. It's at 221, so it's well below that. So really not a good place to be buying this thing. There is a bad omen here, and I want to show you this. And when you see this is kind of not the kiss of death, but it means a major trend change, and that is that you have this volume spike. As you can see, this huge volume spike. And by the way, this is exponential. You have this huge volume spike, and at the same time, you have this huge pullback here. This is a major sell. So what we're seeing here with CRM, I would sell this thing right now, because I do believe that the big boys are jumping out of this one. For whatever reason, they're jumping out of this one. So CRM, I think you got to be really careful with right now. It's only got a relative strength of 59. That's not good enough. It has a checklist of 6 out of 9, so that's still okay. And we do have quite a few funds in this. So I do think that, we could, we could potentially see, and I don't think we'll see shorting yet, but we might see shorting in the stock if some of these big boys have to get out. Don't get in right now. It's not a good time to be in CRM. It just, the chart says that it just isn't good. So, not the best thing. Hey, thanks, Martian. Let's look at Etsy, ETCY, and of course, everybody loves this one, ETCY. And of course, it actually, they like it more when I spell it right. ETSY. It had ETCY. ETSY is Etsy. Here we go. Let's look at the monthly. Okay, so first of all, of course, this is good. We have nice, again, this is Etsy, so we have a nice upward momentum. We pulled back a little bit today, $5.81. The question is there a place that we can buy this thing? Let's look. And it pulled up. It's right in a buy zone right now. It is actually buyable right now. The pivot on Etsy on the first stage consolidation, 154.88. So let me put that out there on the chat. ETSY buy point is equal to let's see, I think it's 155 is where 154.98. I'm sorry, 154.98, and that's the buy point on that's the buy point on Etsy is 154.98, and that's a first stage. So we put first stage. Just put that out there for everybody for the buy point on the chat. And by the way, if you want to see the chat and you're looking at me on TikTok, you can just jump over to YouTube. I'm simulcasting this www.DallasTradingFloor, www.youtube.com/DallasTradingFloor, and you'll be able to see all the chat. And of course, after the show today, it'll be up in about 30 minutes. After that, you'll also be able to see that. So Etsy looking very good. It's in a buy zone right now, and it's definitely buyable at this level. So I definitely like this stock a lot. Okay, Mr. Sid bought some CrowdStrike and AMD. Any thoughts on Nio? Okay, well, I think Nio may be needing a rest because it's. I'm still not convinced it's viable right now. It's continuing. It pulled back up, so we're definitely in a kind of a price discovery mode here. Let's go to the weekly chart to kind of see, general trend here. We still have a very bad general trend, as you can see. This is the weekly chart now, not the daily, and you can see we've pulled back to the 40-day line. Here's the thing: if this falls below the 40-day line, then I think you can't buy it. But if it bounces off this 40-day line, then you might have a chance on this to buy the Nio again. But I wouldn't buy it today because if you can look here, we have a downward trend on this relative strength line here. And what this little blue line is that this is if you took the S&P 500 and you were looking at it, this would be the 50th percentile of the S&P 500. Okay, now because we always want to buy them if they're above that, so we're definitely above that. And of course, our relative strength here is 99, so we're in the top 100%. But this is over a year's period of time, so this isn't always totally accurate. But we have pulled back, and we're pulling back to the 40-day line. So the big picture here is, if it bounces off this 40-day line, we might be able to buy this thing. Right now, we're going to have to watch list it. We can't really buy it at the level that it's at. We definitely have some nice sales increases, and remember, in tech stocks, in growth stocks, we want to see that increasing sales. That's one of the most important things. Profits typically come later because, as you know, the market is basically a forward-looking market, typically about 6 to 18 months. So if we have increasing sales, that is a good thing. So we definitely have that with Nio. Let's look at the checklist. It's still good, 7 out of 9. That's actually quite excellent. And we do have increasing fund ownership. So it is buyable. I mean, Nio is buyable. It's just not buyable right at this moment. My advice on this, Mr. Sid, is wait a little bit. Let's see if it bounces off that 40-day line. If it does, then then we might have something. Then we might have something to do there. And Palantir was down. Well, that happens. I mean, yeah. Let's take a look at Palantir to see. I read a story. George Soros is heavily into the stock, and he's been wanting. I think he wants to short it now or something. I don't know. He put out some bad press about it, so I'm not totally convinced. But it's down today, $3. So it might not be the right the right thing with that downgrade. Let's look at the daily. Okay, we pulled up a bit today, a little bit. We took that dump, but now we seem to get some buying. So some buying has come in there. Here's one thing: Kathy Woods, who runs the ARK Invest, last week bought about 10,000 shares. So I am not totally convinced that this is a lost cause, but we'll see. Set your stop losses. Set your stop losses on that. Apple. Thank you, Daniel. Appreciate the question. As you know, I did take a position in Apple just a while ago. This is going to be more slow moving. It's down just a tad today. It's about 50 cents. Not a lot considering the value of the stock. Let's look at the weekly chart. I think the weekly chart is fairly good. We do have a consolidation here, and there is potentially a pivot at 137. Now the question is, why did I just buy this? That's a good question, and I'm going to show you kind of why I did that. When a stock trends downward like this, and it's been trending down. Oops, did I get that right? There we go. It was trending down. You can see, and as the 21-day line moved above this trend line, that's where I bought it, right there. Right there. Oops, there we go. Right there. And so now it's starting to trend up. Now the question is, how long will this trend hold? Well, if we can get past this 125 level, and we're about $3 away from that, then I think it will continue. It will continue higher, but it may bounce. It may just go like that. It may just hit that and just go boom and then down. So we're going to have to see. But that's where I bought it, and that's the reason I bought it was because it was a trend. This is a trend, what they call a trend reversal, and basically it bounced off of this 21-day exponential. I prefer it if it bounced off the 40-day, but I didn't really want to wait. But I wanted to get back into Apple and start building a position. Now I have one position here. If it passes this level, which is about the 137 mark, I will add another position to it. And Apple is, it's one of those big cap tech stocks that I like. 7 out of 9 on the checklist. We have extremely good fund ownership, and we also are coming into one of their strongest seasons of the year, of course. So they should be returning fairly good numbers. Their numbers were basically even last month, but we'll see. They've had increasing sales, so that's good. Again, it just depends with the 5G how well that'll do. But I definitely think that it's still viable at this level. But don't go in with a full position, maybe only a half position until it goes past 137. And then once it passed 137, then I think you can go with another position. I do think it's a quality stock. So that's really the long and the short of it. It's Thor 71. Can you talk about Tesla going into the S&P on the 21st and the buy and hold strategy around that? Well, here's my thought on that. And I sold out of all of my positions of Tesla when it pulled back to 570. I had a stop loss set there. And again, of course, I moved into the position starting at about 450 and then 465 as it made the first sort of pivot, and then 502 I put in more, and then I just let it ride up. And then what I did is I pushed my stop loss up. Now I'm also waiting for another entry point into Tesla so I can ride it up again. I do think that we need to get past the $600 mark. That will be an all-time high for Tesla if it goes past that 602 level. And I think once it does that, and once it holds that, then I think we can safely start putting into it. I do think it's going to go higher by the end of the year. So that's a very, very good question. And I will be handling that on the Action Trade Alerts. So if you want to subscribe to to the Action Trade Alerts, very, very easy to do. All you have to do is go to www.Dallas Trading Floor, and that is that, and this sign up for the Action Trade Alerts. Just give you an idea of what that site looks like. If you want to take a look at what the site looks like, so that you can see kind of where you need to go in order to get that. This is what www.Dallas Trading Floor looks like, and on the homepage there's subscribe free trade alerts, first, last name, and then email, and hit that subscribe button, and you'll be good to go. And by the way, these are just the these are the thumbnails for the current YouTube videos. And by the way, really appreciate it if you could subscribe to Dallas Trading Floor on YouTube at youtube.com/Dallas Trading Floor. Really appreciate it, of course, if you hit that like button and you subscribe to me on YouTube. That would be great. All right, so next question from TikTok. Let's see. Okay. What's the book behind you? Thank you. That is, and I show this because this is the book that kind of helped me change into a much, much better trader. Because I used to take a kind of a the way I approached trading was haphazard. It didn't work very well. And then I read this book called How to Make Money in Stocks: A Winning System, Good Times or Bad, by William O'Neill. And that sort of changed my life. And I just want to be upfront about it. Of course, hopefully it could change your life. Now I have the book on my website at I have the book on my website, and basically it's on the Amazon. It's on Amazon, so it's super easy to get. You can get it by going to my website, www.Dallas Trading Floor, and just clicking on the book. But this is the book, How to Make Money in Stocks: A Winning System, Good Times or Bad, by William O'Neill, and it's available in both the Kindle version and the paperback version on Amazon. So that is a book, and that I highly, highly, highly recommend. That you read, so you kind of get an idea of what I'm talking about, buy points and all this kind of stuff, because it's all covered in that, and it's very powerful in terms of in terms of that. So let's look at CVS. Thanks, Tarika. Thank you so much for that question. Let's look at that, and of course, I believe this is CVS Pharmacies. Yes, CVS Health Group, and of course, one of the great things about CVS is that now have these. They're not just drugstores anymore. They also work, and they have the distribution of all kinds of health related things. So they're pretty strong. The healthcare structure probably will be strong if it turns out to be a Biden administration, and if it does, which looking like it will, then healthcare stocks should do well. Now, there's some issues here that I want to point out, and probably why I won't be buying the stock, at least not right now. The first problem is that it only has a 47 relative strength. It does have good, potential sales earnings growth, which I like. But funds are about 40% of the outstanding shareholders, and we do have increasing fund ownership. So all that's good, but the 47 doesn't really appeal to me that much. We have 6 out of 9 on the checklist, so that's okay. That's my minimum. And the fund ownership is increasing. So those are all good. But I do have a concern, and that's relative to this RS line. It has pulled above the 200-day moving average, so that is good. I would watch this one. I would not buy this currently at its current level. I would wait on this one, because we do have sort of a spiky kind of thing. I want to see it move convincingly above this 74 before I would buy it. But this is a watch list stock. The only really major concern is the lack of relative strength. I do like to buy high relative strength stocks, but this stock should do very well in a Biden administration. So not a bad one to have on a watch list. Can you do a course on cover call options? Absolutely. As a matter of fact, I'm putting together some, chart pattern courses, and they're going to be available on the website, on either on the website or on actually just go to youtube.com/Dallas Training Floor, and we're going to have there's a series of videos in there that I'm making called Chart School, and in these Chart School videos I'm going to show you exactly how to do cover call options, because it's such a powerful strategy. I did this, I've done this for years, and it's a great way to generate income, even in a market that isn't rocketing up. So it's a tremendous strategy, and I definitely will be doing something on that. So I really appreciate that. That thoughts on Fastly, and of course this one fell off the face of the earth, and fortunately I had my stop losses set on this one. It kind of took a swan dive. The question is, can it come back? Well, you know what? It's funny. Sometimes when stocks take a swan dive, they get right back and get up and fight. So this one might be in that range. There was a buy point on it, and that was basically on a consolidation base at 117. Of course, it's at 82.81. The question is, can it move back up? Well, it's already starting to see some nice promise, on the 21-day line, and it does have a nice relative strength of 97. There has been a little bit too much selling volume for me, but we do have nice sales growth, so that's good. On the checklist, we have 6 out of 9, so that's my minimum, and we have increasing fund ownership, even with the sell-off. Now, the question is there a place that we could buy this thing? Well, I want to see a little bit more conviction on this. Typically, one of the best places to buy it is as it moves above the 40-day average. So we might have a good potential buying opportunity here if the trend continues. And this is the trend, so that's good. So I want to see this thing. I would buy this if it went above, let's see if I can give you the exact number, 85.43. So I possibly would buy this one above 85.43 on strong volume. So this is a watch list. So above 85.43 on strong volume, I think that you could possibly get it. Now, I wouldn't go in with a full position on this one because we just don't have enough confirmation. We really have. We could do a half position at the 40-day line and then potentially another half at the pivot 117.79. So that's kind of that's how I would, I would do it. And Real Madrid. Great team. Excellent team. And by the way, here in Dallas, we have FC Dallas. So I just thought I would put that out there for anybody that's interested in soccer, and I certainly am. Corsair Gaming. Right. So that's CRSR, I believe. Yeah, Corsair Gaming. This one has been really interesting. It's pulled right back up 179. So it bounced. We had a bounce on the 21-day exponential. Let's look at the weekly chart here first. We pulled back below that 21-day line, and then boom, we moved up. There's been a fair amount of selling this week. Now this is the weekly chart. Let's look at the daily chart. Let's see if we've turned that around. Yeah, we have some buying coming in here. Not quite as big as the selling. So there was a bounce off this 21-day line. This is not a bad place to buy it, by the way, off of that 21-day line. So the question is, if it can hold tomorrow, then it might be worth looking at. We do have a relative strength indicator moving up, so that's good. Let's look at the fundamentals let's look at the checklist. 7 out of 9, definitely good, and we have 55 in there. So yeah, this one should be watch listed. I'm going to probably watch list. Let me put it in my little book here so that I'll have it. But I think that Corsair should be watch listed. CRSR is the symbol. I'm just going to put the watch list, things I'm going to put, possibly look to put on the watch list. But this one is buyable. It's just not buyable right at the moment. I want to see it. I want to see it. Give it, a few more days to see if it moves above. It stays above the 21-day line. That's where I want to see it, above that 21-day line. But I do think it's buyable, and tremendous stock, and it's really been moving. Okay. Any thoughts on Amazon? Amazon's been trending lower as of late, but it's run up so much that it's still a terrific stock, but it's not. It's every stock has its season, and as you can see, we've had a bit of a downtrend here. Let's see if there we go. We've had a bit of a downtrend. It seems like it's moving higher. Would I buy this right now? Well, I would on Amazon. I want to see it move above this trend line, and currently this trend line's at about 32.78. So it's 32. So it really needs to pull up here a little bit before I'd even consider it. It's trending lower. So would I buy this right now? No. I'd put it on a watch list. Wait for it to move above this trend line about 32.78, and then I think you might have a buy. But the thing about it is that it is starting to flatten out. It's starting to flatten out. Whereas it was moving, like this in this last little bit, we've flattened out. So I don't know. This is a base pattern. This is starting to base, and when it pulls above the buy point there, that's when you want to buy it really again. So you could definitely watch this one. I would be kind of careful on this. I would wait probably until it exceeded 52, until it exceeded 35.52, and that's the buy point on the first stage consolidation. So I probably would wait until that happened. I mean, you could buy it a little bit early, if it moved past about 33.66. But right now, I think you just have to watch this. You have to watch it. Hopefully, it'll go higher, and then once it passes that buy point at 35.52, that's when you want to do it. So I'm going to put the buy point down for Amazon. AMZN is equal to 35.52.25. So that get that out there on the chat. And by the way, for everybody on TikTok, I am simulcasting on YouTube. Well, I've come to an hour, and I thank you for all your questions. Thank you so very much. If you want to get on the action trailer, it's super easy to do. All you have to do is go over to www.Dallas Trading Floor and sign up, and you'll be good to go on that. I'll be back tomorrow at 2:30. Hope to see you then, and at least until then, happy